Hey, good afternoon, everyone. My name is Jeanmonod. I'm a Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to do a deep product dive into bank statements. It's our most popular program. It's the fastest growing segment of the workforce. But to help me do this, and it can't be done without two subject matter experts, I'm going to introduce Annie Jensen. Annie, please say hello to our group here today.
Thank you, John, and hi to everybody. It's so wonderful to see so many of you guys join us this morning. My name's Annie, and I have been with the Angel Oak family since 2015. So when I started with Angel Oak, I actually serviced the Atlanta market, and then I'm originally from Seattle, Washington, so I moved back into Seattle in 2019, so now I cover the Seattle market. So super excited today. Preparing for this webinar today, I was thinking back on loans that I've done and kind of looking through the numbers, and I think I've done over 500 bank statement transactions. That's probably worth about a total of $250 million worth. So I am excited to answer all your questions today. There's probably not a question you can ask either Jerry or I that we're not going to be able to answer. So put on your listening and ears, and let's jump into this.
Yeah, Annie, that's great information. And we've been doing this since 2013 at Angel Oak. So, and Annie's a top producer, and I wanted to introduce Gerry Calderon, who's also a top producer who I have the pleasure of working with every day. And Gerry's in the Tampa St. Pete area, so we've got Washington, we got the entire country covered here. So, Gerry, please introduce yourself.
Good afternoon, everybody. My name is Gerry Calderon. I've been with Angel Oak now going on 6 years. Been in the market for over 15 years in the non-QM space, subprime/non-QM. I'm super excited to be here with everybody today. Hopefully by the end of this webinar, we can make everybody here a bank statement expert, but we can also educate you a little bit on the non-QM world, and excited to be here with everybody and getting this thing rolling.
Yeah, and Gerry brought up a great point. By the time we're done here today, we hope you could be an account executive at Angel Oak. We're going to do a deep dive. We're not only just going to talk about bank statements, we're going to talk about what the loan application needs to look like, what we look for on credit, and we're also not just going to teach you about bank statements, we're also going to teach you about a lot of great tools we have, not only when it comes to pricing loans, because a lot of questions we get, we've been doing this now for 25 months, not only just how you get paid, but we're also going to talk about how you can market yourself, not only to self-employed borrowers, but how you can market yourself to different parts of the industry. So we're going to really spend a lot of time doing that today. So before we go into this, we're going to do a poll here. How many of you have originated a bank statement loan in the last 12 months? So while we're doing this, and this couple of things here. This is going to be recorded, and if we don't get to your questions today, we will have an account executive reach out to you. But while this poll's going on, I wanted to share a couple of statistics with you. In 2020, and bear with me here because I'm going to throw out a lot of numbers here. In 2020, new business applications grew by 24.7%. That was the largest increase in new business applications in over 10 years. And guess what happened in 2021? New business applications grew over 2020 by 22.7%. So as I mentioned, this is the fastest growing segment of the workforce today. So Steve, what is our, let's see if I can share the poll. So 63% of you have not originated a bank statement loan in the last 12 months. So this is a huge opportunity, not only for us to educate and inform you, but it's a huge opportunity that this is the biggest, fastest growing segment of the workforce out there that you can grow your business with. And guess what? Those borrowers who applied for a new business application in the first part of 2020 are now eligible for bank statement loans today. So, all right, let's go. So Annie, give us some highlights of the bank statement program.
Perfect. Okay, let's jump into this. So to qualify for the bank statement program, your borrower needs to be 2 years self-employed. So now on the website, we do have an option to use 12 months bank statements, but even with that option, they still have to be self-employed for 2 years. Now, what counts as self-employed? So they have to own a minimum of 25% in a business, or if they are 1099, then that also counts as self-employed. So if they are a sole proprietor, LLC, that all counts. So now, the way that this program works, and really, I love talking about how this program works, is first of all, don't even bring up tax returns to us. When you reach out to your AE, we don't care about the tax returns on this program. Throw them away, burn them, get rid of them. We don't want to see them. So we are going to review the borrower's bank statements either over a 12 or 24-month period. We're going to look at the deposits that are going into that account, and from those deposits, we are going to derive an income figure. Most of the time, it's going to be an average of those deposits that are flowing into that bank account. Now, I get asked this question all the time, what's the difference between personal? What is the difference between business? So I would say dominantly 60 to 70% of the loans that I'm doing, we're doing a business bank statement transaction. So what we're looking at when we're reviewing those business accounts is what are the monthly deposits going into that account. Now, every business always has an expenses that are associated into that account. So part of what we're going to review is an expense factor. So when you're working with your account executive and we are going through the prequal phase of the prequalification, we are going to actually send out to you a business questionnaire, and we want to find out the size of this business. The standard expense ratio we will use is 50%, but depending on the size of the business, sometimes we will use up to 70%. And then if it is a smaller business and we do need to use more of those business deposits, we can use down to actually a 15% expense factor. So, and that's going to be determined by the size of the business, do they work out of their house or not? So that is how we will determine that bank statement income from business statements. Now, we do have an option to use a personal account, and to use the business bank statements, they need to own the business at least 50%. So now, if they are using the personal account, then they only need to own that business 25%. So that is an option if you have a borrower, they do not own 50% of that business. So what we're going to be reviewing on the personal bank statements are the deposits going into the account, and we can take transfers from that business account into the personal account as well. Now, we do have one caveat on our personal statements, and that's all borrowers that or anybody listed on that personal account needs to be on the loan. So if we have 2 people listed on that bank account, they both need to be on the loan. So everybody always asks me in the beginning, okay, well, Annie, I don't know, do we use business? Do we use personal? So really the best practice you can take forward working with your borrowers is get copies of both accounts and let's review them together. Depending on how they're doing their deposits, sometimes we can get more in the personal, sometimes we can get more in the business. So it's really easier up front if you just ask your borrowers to obtain both copies. So now this, and what's wonderful about this program is, a lot of times I'm working with borrowers and they qualify from their tax returns, but maybe they only qualify to buy a $500,000 purchase price and they have their eyes set on that $1 million property. So most of the times, looking at their bank statements, we can get them qualified at the higher amount where they truly want to purchase. So it's a great transaction because we throw away those tax returns. Everything's based off the income that's thrown through those bank accounts. So now,
yeah, Hey, Annie, one of the things I've been doing lately, and probably for the last few months, is and you touched on it perfectly there. If you know you're meeting with a self-employed borrower, why not, when you go there and get their tax returns, get their bank statements at the same exact time and go down these parallel paths, right? Because what Andy's saying there is you're going to increase that borrower's purchasing power, 2, 3, 4, even 5 times as much. And then you're not in that, in that lurch, so to speak, of all of a sudden you got their tax returns. When you finally got their tax returns and you have a contract in on that house and you realize that they don't qualify because they wrote off a lot more in their tax returns than you thought they would. And, bang, now everyone's hair's on fire and, you're trying to qualify them for the house they already have earnest money on and a contract date. So sorry, Annie, I apologize. I love that part though, increasing their purchasing power though.
Oh yeah, exactly. Let's let them know what they qualify for and get them out there and get them shopping. And I also brought a good note that you also brought up too, John, when they go under contract, is I also get asked this question all the time is, do we do pre-qualification on TBDs? And that is an absolute yes. So reach out to your account executive at the very beginning of the transaction. Do not wait for them to be under contract. Let's get them pre-qualified so that way, once they go under contract, we could get that closed in 30 days and it'll be a smooth process. So, but other highlights of this program is we can do this on an owner-occupied property. We could do this on second homes, and then we can also do this on investment properties. We could do cash out refinances, and then after 6 months, we can actually use the new appraised value. So if you have a borrower, and I have seen this a whole lot where I've had borrowers go in and they've paid cash for a home, they've gone in, they've updated it, and now they want to go back and do recoup and get that cash back out. So that's been a very popular trend, especially in the Seattle area. So, and then on this program, especially in the Seattle area, we have a lot of high home prices. So we also offer interest only. So with either a quarter or a half point add to the rate, we can do an interest only option and help get them into the lowest payment possible, especially in this rising interest rate market. It's a great way for them to get the payment, the lowest payment. So, and then we also do non-warrantable condos. And so our strength in non-warrantable condos is investor concentration. So it doesn't matter. We can't go over 20% one entity in a building, but if they 100% investors, we're okay with that.
Yeah. Hey, yeah, Annie, you've answered a bunch we got a ton of questions coming in here, and we're going to get to your questions here. I promise you. This is being recorded. We will get this recording out before end of day tomorrow. And if we don't get to your questions, we will have your account executive reach out to you personally to answer your questions. So as I mentioned earlier, we're going to teach you about everything about bank statements, but we're also going to teach you what we like on the loan application. So Gerry, give us, what would a perfect loan application look like to you, Gerry?
Yeah, John, I'd like to mention something on the increasing the buying power for your borrowers. I this morning actually was working on a loan with a gentleman who was a chiropractor, and the gentleman was trying to qualify the conventional way with his tax returns, no W-2s, his tax returns, of course, and he was looking to purchase a $450,000 home. Okay, we got his bank statement, and when we got the bank statements and we reviewed, and we had the bank statement review team give us the income calculation, we were able to pre-qualify him for a $550,000 home. So we increased his buying power by $100,000 just from going the traditional way into a bank statement loan. We all know we're paid by volume, so we like the higher loan amounts. So that in that situation, that's something to always keep in mind. So I just wanted to mention that because I actually ran across that as of this morning. But awesome. The 1003 application is really simple. Okay, we want a complete 1003 just as you would do with any loan. Okay, you're going to input in the 1003. You're going to make sure you have all of the employment information that needs to be 100% complete. Okay, so you're going to put the borrower's name of the company. You're going to put the address of the company, preferably how it matches on the bank statement. Under the position and title, you're going to list the position and title. If they're the owner, you're going to put them as the owner on there. And then you're going to fill out the amount of time that they've owned that business, or the amount of time that they've been self-employed, obviously showing over a 2-year history. The one thing that you do not want to do on the 1003 is we don't want to see income in there. And the reason why is we do the income calculation for you. I'm going to repeat. We do the income calculation for you. So yes, we do the legwork to find out exactly how much that borrower is making on a monthly basis with their bank statement. Once we get that calculation from the bank statement review team, at that point, we'll let you know what the amount is, and then you can put that amount on the 1003. Otherwise, we want a complete 1003 just as you would do on any traditional loan. And the employment information being 100% filled out is the most important part.
Yeah. And the other couple things, Gerry, where they're living, how they're paying, right? Those are just critical pieces of information, because payment shock does come into effect when we are pre-qualifying a borrower. And Gerry mentioned this, Gerry mentioned this, he kind of glazed over it, but the great thing is we're calculating that bank statement income for you. I mean, so Annie mentioned we'll do it on a TBD. Your borrower can go out and, you know, shop for a home that they already know they're going to qualify for, and, you know, 2, 3, 4 times what they would have done on their tax returns. As Gerry mentioned, an extra $100,000. What referral partner, realtor, wouldn't love that you just made them an extra commission on $100,000, right? So, so Annie, talk a little bit about what we look for on the credit report.
Perfect. So on the credit report, the qualifying trade line that we need to see is either 3 open trade lines for 12 months or 2 for 24 months. So, and what we're looking for is all of them must have had activity in the past 12 months. So they can be closed, but as long as they were closed within the most recent 12 months and we have activity on that, then that will count. So this program starts at a 640 credit score. It goes up to 80% LTV. And then with a 660, we'll go up to 85% LTV. So now this is really, really important, as John just mentioned, is we have to verify housing history. So we will allow them to have 1 housing late over the past 12 months, but we must verify that housing history. So if they own their current home free and clear, then that is fine. We don't have to verify anything. If they are renting, we must verify that. So I kind of put together a little to-do list. So this is great if you guys want to write some stuff down, help you become an expert in this program. So number 1, when you first meet with your borrower, when it comes to the credit piece, number 1, ask them if you're paying rent, how are you paying that? I would say in our underwriting, that's the number 1 hang up that we have on big statement loans is verifying that rent. So make sure you have number 1, verifiable rent. Number 2, down payment reserves. This program requires 6 months reserves on the subject property only. And we can use their funds in their ending balance in their business account for the down payment and for reserves. So always find out where is that down payment and reserves coming from. And then as Gerry mentioned, complete 1003. When your loan comes in for underwriting, we pull a loan safe. So, and I've had this happen on loans where borrowers do not disclose that they own other property. So always make sure to ask them about their REO, because this program, it can impact the DTI. So, so make sure that is fully disclosed up front so we can make sure that that's accounted for in the DTI. And then also we also need that tri-merge credit report after you're completed 1003. And then ask them and make sure that they have access to either a CPA or accountant, because on this program, we always have to verify that they do own that business. What is their ownership percentage? And especially if we have to do the CPA letter. So make sure if they are not working with a CPA or accountant of this type, that they have the ability to reach out in the future. So when you first sit down with that bank statement borrower, if you could tackle those 5 areas right up front, that's going to make the prequal in your loan go really, really smooth.
Yeah, so a lot of questions coming in. So guys, we're going to get to them all. Gerry, Fred asked, how do we prove that the borrower's been self-employed for 2 years?
So the way we're going to prove that the borrower's been self-employed for a 2-year period of time is we're going to get a CPA letter or a third-party CPA letter or a tax preparer letter that lets us know the amount of time that they've been self-employed for. Additionally, if it's a business bank statement deal, we're also going to want to know the percentage of ownership that they have in the business. So the CPA just includes, J&K Landscaping has been incorporated since 2006, and John Lynch is 100% owner of the business. That is all that we need to see on that CPA letter. Obviously, it's got to be on a company letterhead, and we do have to verify that CPA or tax preparer does exist. But it's as simple as that in order to confirm their 2-year self-employment history.
Gerry is such a homer. He threw in John Lynch. You know, he's a Tampa guy. God almighty, Gerry.
That was by accident.
Yeah, whatever. So, hey, Annie, I think you mentioned DTI. What's our DTI on this program?
So we look at 2 different types of DTI in this program. So the front end DTI, that's going to be 40%. So of course, that's going to be the mortgage payment only, and then the back end DTI, and that's we're going to allow to go up to 50%. So pretty good DTIs.
Yeah, and one of the things, Annie mentioned reserves, and Gerry's mentioned a bunch of characteristics of the loan. 30% of the loans Angel Oak closes don't meet our guidelines. And it's because of people like Annie and Jerry that have such a deep history here at Angel Oak. They know the loans that Angel Oak likes to close and wants to close. So, that's why working really closely with your account executive and sharing that information that Annie mentioned, up front is critical. Jerry, we talk about doing this on purchase, refinances, and cash outs. Talk about delayed finance. We got a couple questions here regarding delayed finance, and one's from John.
Yeah, that's a great question, actually. We're getting a ton of delayed financing that's happening right now, especially in the Florida market. Delayed financing is when the owner wants to recoup the funds that they purchased the home with. We can do delayed financing up to 6 months from the purchase. Now, we will need to source the purchase funds from the original transaction, but otherwise they are able to go up to as high as 85% loan to value, depending on the credit score that they have, and they can recoup the amount of money that they purchased the home with. It's a great way if you're in a contract that needs to be closed in, say, a 20-day period of time, and we're a time crunch and things, and the borrower just decides they want to go and they want to pay cash for that property, they can do so, and then we can turn right back around and do a delay refinance for them in order to be able to recoup those funds.
Yeah, Jerry, great. Thanks for sharing that. And the other thing I really want to talk about is cash outs. 30% of the loans we're closing right now are cash outs. The 4 things I like about cash outs are: you take a seller out of the contract, you take a seller's agent, a buyer's agent, and you take a contract date out. And, a lot of people looking, as these short-term interest rates continue to go up, whether it's on credit card or any other debt, a rate of 6, 7, 8 is not bad to pay off 25% interest rate. So we're doing a lot of cash outs right now. Create your own business, and we'll talk a little bit about that later on. So Annie, we talked a little bit about expense factor, and Linda's asking, are the number of employees part of the business questionnaire affect the expense factor?
Yes, great question, Linda, and that will definitely affect the expense factor. So pretty much the more employees you have, the higher that expense factor we're going to apply. So if they own, like, let's say, a retail business, and they have upwards of 10, 15, 20 employees, so we're going to be falling more into the 70% expense factor, whether if it's a in-home business where maybe it's just them or one other employee, where we can apply either that 30 to 15% expense factor. So it's on the questionnaire, and we do look at that.
Yeah, and again, this is all done up front. Jerry, Annie, any of our account executives across the country are not going to issue a prequal to you without verifying the income, verifying that business questionnaire, verifying that expense factor. All that's done. And as Annie mentioned, we can do that on TBDs. So, work with your account executive. Hey, Jerry, Claudio is asking about, what if a borrower is self-employed and someone else, or a spouse, or even if they are W-2'd, how do we get those deals done?
Wow, that's another great question. We can absolutely do that. We can take the self-employment income from the bank statements, okay, and we'll get the monthly amount from the bank statement review team, and then we can additionally add the spousal's W-2 income, just as you would on any traditional loan. Now, we will not need tax returns for the W-2 income. We'll just get the pay stubs and the VOE to verify the W-2 income, and you can combine the 2 incomes together in order to qualify for the loan. Great question.
Yeah. And then Annie, Jonathan's asking about 1099 borrowers. Can we do bank statements for 1099 borrowers?
Yep, we definitely can. So they just have to be 1099 with the same company for a minimum of 2 years. And then we can either, actually, we do have an option to use their 1099s. Now, actually, this time of year, since we're in September, what we can also do when we use the 1099 borrowers, we need to verify how much money they have also made year to date. So if we're reviewing their 2020, 2021 1099s, then we also need to verify that that same income is still being made year to date. So either we could do that with the bank statements, unless they work for like a national company and they get professional pay stubs done, then we can verify with the pay stub. But 1099 borrowers, they qualify.
Yeah, a lot of great questions coming in. Jerry, one of the questions Kevin's asking is, what do we consider as far as verifiable rent?
So verifiable rent, there's two ways that we're going to go about that. Okay, the most common way that we're going to verify the rent is going to be with canceled rent checks. Okay, we're gonna need 12 months, a minimum 12 months canceled rent checks. Now we can see that amount coming out from the borrower's bank statements, then we can utilize that. So we clearly see they're paying $1,500 a month in rent, and we see $1,500 a month being withdrawn each month around the same time each month, then we can utilize that amount. We do have a private VOR option also, depending on the credit score and the LTV. We can do a private VOR. It's 80% or less, 700 mid or higher. In order to do so, we do have a quarter hit to the rate. And now that private VOR does have to take place by a third party. It cannot be a family member or somebody that they're living with. It has to be from an actual management company that we can verify that, but we do have that option also.
Yeah. One of the things I want to mention here, Gerry, and hopefully everyone on this call can see the professionalism and the knowledge that both Annie and Gerry have. Trevor has some, just some, angst about, hard stops and stuff like that. That's why we, as I mentioned, we do that prequel for you up front. You're not giving your borrower a pre-approval letter from Angel Oak without us feeling 100% confident in that prequal. So, Trevor, if you are, any bit of uncertain about anything, that's why working with these account executives that we have across the country is critical, and doing that up front and getting all that information, like Gerry mentioned on the 1003, really taking a deep dive into that 1003 loan application, as one of our other account executives calls it. That's the DNA of the borrower. And you know what? We're going to do the best job with the best information that you give us. So really dive into it. We all unfortunately have a little bit more time on our hands. Let's dive into these borrowers and really learn about them. And I was at the FAMP last month, and Barry Habib, said it so well, is let's go back to being advisors. Right? Let's go back to being loan advisors to these borrowers and really helping them get in these houses and not wasting, your referral source, because that's the one thing here at Angel Oak, and I'm going to get off my soapbox here in a minute. That's the one thing here at Angel Oak we really respect, and your referral source, and we know how that makes you look in your circle of influence, so to speak. And we really admire it and respect that, and that's why we do these prequels, and we spend a lot of time up front doing those. So, Trevor, hopefully that puts your angst at ease. Some other questions. One of the other things, Annie, you mentioned the interest only. We have a lot of people. Interest rates are going up, right? Appreciation of houses are going up. Talk about how the interest only works on our program.
So for the interest only period the borrower has is going to be for the first 10 years of a loan. So it's actually, in a sense, a 40-year loan. And then the second portion, the 30-year, then the loan is amortized over the 30-year rate. So it's a great way for that borrower, and we do the qualifying up front. The DTI will be based off the 30-year amortization because I still get this question all the time. Even though we're NonQM, we still follow under ATR. So we still have to make sure that we do the full 30-year when we qualify, and then they get that interest-only period for the first 10 years. So it's actually very, very handy, and it's a great selling tool. Right now, especially in the Seattle market, all the quotes that I have going out, I'm always sending them a quote with interest only as well, because right now, if you go and you quote that rate, we're still getting a lot of rate sensitive borrowers where, oh, maybe I'm not ready for that rate yet. We're coming off the lowest rates in the history of our lifetime. So it's time to get back to quoting that payment and giving your borrower options and painting that light at the end of the tunnel, that this is a great way to get in this home, and then down the road you can always refinance into a low rate. They go down again.
Yeah, thank you, Annie. And we're doing a lot more interest only. I mean, it's just across the board. So Gerry, you mentioned delayed financing earlier, and Michael's asking, I think it's Michael. Yeah, Michael's asking, what's the max LTV on delayed financing.
You can go to as high as 85%.
Yeah. Yeah. And then Annie, max cash out LTV for bank statement loans.
So we'll go up to 85% for a cash out LTV. So, even in this marketplace where there's a lot of uncertainty moving forward, great LTV. So, that's probably one of our hottest products right now is self-employed borrowers are utilizing that equity right now.
Yeah, Jerry, Brad wants to know why would you do 12 months versus 24 months on bank statements?
One thing to add, John, don't forget on the 85%, we'll do one loan with no MI. So do keep that in mind that it's one loan with no MI also every time we keep saying 85%. I'm sorry, what was the question again?
Yeah. Why would you do 12 months versus 24 months on bank statements?
So you'll want to definitely take a look at it. The reason you would do 12 versus 24 is if you have declining income of some sort. Okay. If you have declining income, then obviously that's going to be an issue. And at that point, you're going to want to go from the 24 months to 12 months bank statements. But we actually do the calculation when we do it, both 24 and 12 months. And we'll be able to see that up front and let you know if that's going to become an issue or not.
Yeah, Jerry, I love one of our account executives says this, and I love using it. Your account executive is your confessional booth, right? They will, and as Jerry mentioned, get us all 24 months. We're going to coach you on whether you should use 12 or 24. So, pull back the curtain, work with your account executive, tell them everything you know about that borrower and their income. And I'm telling you, it will make the process so much smoother, so much smoother. Daniel is asking Annie, and I know we're going to talk about this, but I get so geeked up over it. How are you selling this to real estate agents who are, by the way, 9% of the loans we close on bank statements are realtors?
Yeah, so they are. I've done a lot of realtor loans on this, and real estate agents, this is a great time to market out to the real estate agent. I guarantee you, if you walk into a real estate office and if you ask realtors if they have lost any loans over the last 12 months for self-employed borrowers who ran into DTI issues, everybody's going to raise their hand. So now is a great time to start marketing this. We'll talk more about marketing when we go into the marketing portal because it's one of my favorite things to talk about, especially when it comes to online marketing and then also just hitting the ground, getting back to what we used to do. The area where I live in Kirkland, actually tomorrow, it's going to be Friday, and there are 5 real estate companies that live within literally 300 feet of where I live in Kirkland. And so tomorrow, I'm literally going to go out and I'm just going to walk in. I'm going to say, you know what? I'm the lender here. I underwrite these loans. I'm going to do, my loan officers might actually get some phone calls and be like, I have some leads for you because I just love selling this program. So get out there and talk about it. Go talk to those real estate agents. It's a great time.
Yeah, I can feel that passion from you and Jerry. I mean, I don't know if you could, we love doing this. This is what we do, right? So, hey, Jerry, and you might have to pull up your matrix here, Jerry. Talk about the score. I know Annie mentioned some scores and LTVs, and we just expanded some of those scores and LTVs. Give us the minimum credit score and what that LTV is, Jerry, and then what we go up to from there, if you don't mind.
Sure. So we just enhanced some of these. So we'll go to as high as like we said, 85% LTV. And for the 85% LTV, you need a minimum of 660 now. That's, like I said, that just got enhanced. We can do with a 640 up to 80% LTV. So the minimum credit score is the 640. This program at one time did go a little lower than this, but that's currently where we're at. In this ever-moving market, you guys know things are always changing and evolving as things go. So I'd like to think that before the end of the year, we'll be back to what it was at normal. But again, and just so you know, that was 600. We would go down to as low as 600 for the bank statement program. But as of it stands right now, 640 is the minimum, 80%. And with the 660, you can go to 85% loan to value.
Yeah, and that's why staying in touch with your account executive and going to our website, because it's always updated, instantaneously, staying in contact with your account executive is critical. Annie, we mentioned, verifying how the borrowers pay their rent or whatever. Talk about payment shock, Annie, because, that unfortunately that's becoming, as appreciation and rates go up. Talk about our payment shock. And again, it's just a guideline.
No, it's a guideline, but it is something that we do look at. So payment shock is for first-time home buyers. It's going to be limited to 250%. And then if they are currently a home buyer moving up, then it's going to be limited to 350%. And so that's going to be based on what they are paying currently, either for their rent and for their mortgage. Now, if they do own that property free and clear, then that payment shock guideline is essentially waived. So now we do make exceptions over this as well. So I have been able to get exceptions for payment shock up to 400, 450%. I would say the real hard stop is going to be once we get over to that 500%. That's going to be more of a hard stop. I have not seen an exception for anything over 500%, but it is something we do look at during the prequal process.
Yeah, thank you. And hopefully, Mike, that answers your question regarding payment shock. Couple of other questions here. Jerry, that's a great question here from Franklin. What's the turn times for getting a prequel done, Jerry?
To get a prequel done, we are actually right now at 24-hour turn time to get a prequel done. But once we receive the quick qual, is what it's called in our system, which we'll cover this later. But once we receive the quick qual, we verify as the account executive that you have the credit report, that you have a complete 1003 as we mentioned, and that you have either the 12 or 24 months full statements, all pages of the statements, all the way through the month that we are at. Once we receive that, we'll send it over to our bank statement review team. Typically, they run at 24 to 48 hour. Right now, we're at 24-hour turn time with them. A lot of them will come back a lot sooner than that, sometimes same day. Once we get that income from the bank statement review team, I like to pick up the phone at that point and discuss the loan with you specifically to know exactly if there's anything else that we need to know. And once we get the loan finalized, we'll issue that quick call over to you.
Yeah, and Michelle and Martha, this is being recorded. So if you came in a little late, we will get this out to you before end of day tomorrow. And again, if any questions do not get answered, your account executive will reach out to you no later than tomorrow. A couple other questions here, great questions. Annie, talk about the loan amounts. I know Jerry doesn't like talking about loan amounts because he crushes units, right? So Annie, let's talk about loan amounts, Annie. What will we do? The max. I mean, we kind of jokingly, everyone talks about jumbo and conforming, and I mean, we talk about $1 million loans because that's what we get done, Annie. So give us some parameters around that.
So loan amount. So we will easily go up to a $3 million loan amount. Max is 80% LTV at that 300, at that 3 million. So anything over 2 million, your max is going to be at 85% LTV. So we can actually do a $2 million loan amount at 85% LTV. And trust me, in the Seattle area, it comes very, very handy. Now, I do get asked this question all the time is, will we go above a $3 million loan amount? And that is always case by case. It is exception based. I have seen those exceptions made. Rule of thumb with us is lower the LTV, the better shot we have at that higher loan amount over 3 billion. So if we're at an LTV, I would say 60% or below, and especially reserves. Reserves are key. We look at compensating factors. So 60% or below with good reserves, and also other things we look at, business stability, DTI. If we have good compensating factors, then we always have a good shot at receiving that exception.
Yeah, thank you, Annie. Yeah, so again, it's critical. Like I mentioned earlier, 30% of the loans we close don't meet our guidelines. So it's really, and Trevor has been going back and forth in the question queue here. It's really critical to get early on with your account executive, because professionals like Annie and Jerry, they're going to ask you those second, third, fourth level questions that make this transaction go a lot smoother. And Jerry, speaking of transactions, what's the typical closing time frame to close a loan at Angel Oak?
So we're averaging currently between 17 to 21 days from start to finish. Obviously, the less touches that we have, the quicker we're going to close the loan for you. Once you get your underwriting approval, if we got to touch the loan 3 or 4 times, then that might fall outside of that 17 to 21 days. But right now, we can close a bank statement deal in 17 to 21 days, no problem. Like I said, all of the work is done up front for you. Once we have that quit ball, the income qualification's already been analyzed, it's already been determined. So that's less work for the underwriter to have to do. And then once we get the disclosures ordered, you can order the appraisal at that point once the e-disclosures have been signed. And in 17 to 21 days is very realistic in today's market.
Yeah. And Jenny asked, do we have different LTVs for 1099 and bank statement loans? Annie?
Nope, the exact ones, exact same LTVs, 1099 borrowers, bank statement borrower. And then also to note, with the higher loan amounts, anything that's a loan amount over 1.5 or more will always require 2 appraisals. So if you're working in that jumbo space, especially when you're trying to figure out the timeline for closing, some of my LOs will order both appraisals at the same time. Sometimes I'll wait for the first to come in, but I do want people to be aware of the second appraisal over that 1.5.
Yeah, and Mike, we're going to get to our tool, Quick Quote, where we talk about rates and how you guys get paid. The other question here was, hey Jerry, what about escrows? Does the borrower have to escrow or not escrow, or what?
No, they don't have to escrow. We can waive escrow. We do have that option for them. They can waive escrows. It is a quarter hit to the rate when they do decide to do so, but they can waive escrows.
And Judy's asking, what's our attitude towards crypto? So right now, Judy, I'll answer that. Right now, Judy, we're not accepting any cryptocurrency, just so, but stay tuned. Who knows? Things are constantly changing here. Let's see what other questions. I know we're almost about 45 minutes into this. Jerry, what kind of businesses would have a 70% expense ratio, Jerry?
So businesses with a 70% expense ratios, obviously, for instance, a builder who's got office location and has, say, 40 contractors that are all scattered throughout building homes, okay? Obviously, that's going to require a lot of expenses to carry. Businesses that have multiple locations, obviously, will be another one that we'd have to take a look at. Restaurants are a great example of that. And restaurant owners sometimes will have several restaurants and they'll have 30 different employees in that, and that may carry a 70% expense ratio. But typically, once we look at the business questionnaire that we receive, we can make that determination. You and I can take a look at it, or you and the account executive can take a look at it, and we can say, hey, this is going to require 70%. We don't see it often, very far and few that we see it. And quite frankly, most of our loans qualify at the 50% expense ratio because these businesses have large deposits, and all we're doing is totaling those deposits, giving them a haircut of 50%, divide that by 12 or 24 months. There you go, so it's as simple as that. And I would say probably 7 out of 10 loans qualify at the 50% expense ratio.
Mm-hmm.
Yeah, I agree with you, Jerry. And the critical word Jerry used there was we. We are going to look at it together, right? We are going to do this up front. So again, Trevor mentioned it. Get with your account executive really, really early on, and you take all the other headaches out of it, versus waiting for tax returns. Because if we gave everyone on this call one set of tax returns, we probably have about 5 times as many people on this call, different results. So, the one thing we're going to do is we're going to calculate that income for you up front, and we're going to have that where you can feel confident that that's the income we're going to use throughout the entire process. So, Annie, Gerry mentioned, what if they have multiple businesses or multiple locations? Can we use multiple bank statements for a borrower?
Awesome question. And yes, we can. So if we have a borrower, and let's say, actually, this was a loan that I did. The guy was a Taekwondo instructor, and he had 2 locations. And so he had a separate business license for each location and a separate bank account. So I was able to do a business calculation on each of the separate bank statements. Now, in order to do this, the one main thing we will look at is to make sure there is no commingling between the accounts. So we cannot see transfers going back and forth. And we can only do this with business statements. I cannot do multiple bank statements on a personal account. It has to be with a business. So the max we can do is we can use up to 2 separate businesses to get them to qualify.
Yeah, great answer, Annie. One of the questions here when we do a TBD on a file, is it a pre-approval? Basically, Annie and Gerry are doing a pre-underwrite. Provided the information we have at that pre-underwrite, that's what you can expect, unless something pops up that you or I or the LO didn't know. That's what we're gonna run with. And then we're talking about pricing. Robert, we'll get to your pricing if your company requires 2 lender paid. We're going to get into that here, Gerry. In fact, let's go there right now. I know we were getting 10 minutes to the top of the hour, Gerry. Let's take us to our quick quote. So there's a couple ways we can get there. Here's our homepage again, and we can either go through a non-QM quick quote or up through the top. So Gerry, give me a scenario that you usually run into here.
Okay, so the quick quote, guys. I mean, this is an excellent tool. I mean, when I always say that when I was interviewing to start working with Angel Oak and they took me to the quick quote, I was like, okay, this is pretty cool. I mean, it was definitely something that intrigued me. But the quick quote will tell you everything and anything that you need to know. Okay, once you go into the website angeloakms.com, you simply click on non-QM quick quote. Okay. At that point, the first drop down is going to ask you to select your channel type. The majority of you here are going to select broker for the channel type, and then it's going to ask you for the loan amount. Okay, so you want to make sure you have an accurate loan amount in here. So let's go ahead, John, just for example purposes, let's put a 450 loan amount. And then we're going to put the credit score. Okay, it does fall in increments of 20, so let's just go ahead and go in between the 740 to 759 range. Most of our bank statement loans, I would say.
One of the things there, Gerry, our average bank statement customer has about a 735 credit score. So, 740, so these are great borrowers. So, sorry, Gerry, go ahead.
No, that's exactly correct. I mean, I typically do not see many that are under the 700 buckets. But for loan value purposes, let's stay at the 80% LTV. That is a common LTV that we see. Housing history here's where you would put if there's any sort of mortgage lates, if they had any kind of forbearance in the last 6 months or anything of that sort. Again, if you got 740 to 759 credit score, you typically don't have any of that. So you would just leave it on 0 times 30. Property type, we can actually go up to as high as 4 units on the bank statement loan. So that's something to keep in mind. We'll keep this one at a 1 unit. Transaction type, as we mentioned, we can do purchase, cash out, or rate and term on here. So that's where you would change your transaction type. Now, the income documentation, that we want to make sure that we change to either 12 months personal or 12 months business, or 24 months personal or 24 months business bank statements. Okay. If you're looking to get the pricing for a bank statement loan, that is very important that you have the bank statement as far as the income documentation, that you're not putting it the full doc or 1099 or anything else, or else the income will not be accurate. The occupancy type, that's what we want to know. Is it owner occupied? Is it investment? Is it a second home? Borrower type, we're going to typically select your U.S. citizen. We can do either a U.S. citizen or a permanent res on the bank statement program. The lock duration, I always encourage you to leave it at the 30-day lock. As we mentioned, most of our loans close within that time frame. Escrow waiver, if you want to waive escrows or not, this is where you would select it. And then the interest-only option is the last segment there, which you would select if you want interest only or not. For this particular example, you guys can see right underneath where it says rates and programs, we'll give you all of the pricing there. It tells you the programs, the bank statement program. We requested 80% LTV. The max LTV that we can actually go to is 85. So it's telling you, hey, you can actually go to as high as 85%. Okay. And then your rate is 7.375. The bankruptcy seasoning, that would be if there was a bankruptcy of any sort, it would have to be 24 months out. Housing event, short seller foreclosure would also have to be 24 months out. And then it tells us we need 6 months reserves and gives us the lock duration period that we requested, which is the 30-day lock there. Now, if we go back to the top, John, let's go back to the top there. If we change any of these drop downs, so let's, for instance, let's change it to, let's go to, for instance, let's go to the 720 to 740 bucket for credit score. So the moment that we change that, now if we scroll down, you see that the interest rate changed to 7.5. Okay. If we were to change the LTV at the top, then obviously the interest rate would change going up from 80% to 85%, then that would change the interest rate. So anytime that you select or you change anything, it will automatically change and change for you there. So you've got, we've got requested 75%, max LTV 85, and it gives you a 7.25 interest rate there. Once you do that, okay, one thing, if you scroll down just a little bit further down, Don.
Yep.
These are some general requirements that it's always good to take a look at, regardless of which one of our programs you're looking to. But it actually covers all the way down at the bottom. It actually covers the minimum trade line requirement. So it's good to know that prior to sending in the PreQual. Also tells you the minimum loan amounts for all of the programs. So it's always good to glance at that before you send in the PreQual. Now, once you go back up a little bit there, John, to the view rates, here's where you would see the pricing options that you have, okay? There's two ways that we can compensate you on these loans. We can either compensate you borrower paid, which means you're going to charge your fees all on the front end, okay? Most of the time you're going to give the par rate, whatever the par rate, and then you're going to charge a loan origination fee, whether it be 1, 1.5%, 2%, just cannot exceed 3% on the front side, okay? And then you've got the lender paid option, which means we're going to compensate you whatever your company's approved for, and we're going to build that into the rate that you give the client. And if you stroll down, you can clearly see there some of the lender paid options, just as you would look at any pricing engine that you're used to. And then you just simply select the pricing option that you would like to select on there.
Yeah, so Gerry, you're going to take us into, this is how you get a prequel to us, right? So, we talked about rates, we talked about, running these scenarios through our quick quote. Annie and Gerry available all day long, all night long, but this is available 24/7, our quick quote tool. It's updated automatically once things do change. So Gerry, we've had a few questions here. Well, how do I get a prequel to you? So to show us here, Gerry.
Yeah, so the quick quote is a great tool, like we said, to utilize. Hey, you get that call from the realtor wants to know instant pricing, or you're on a weekend and you want to know, go right into that quick quote and take a look. That's updated instantly. Once they decide they want to move forward and they want to get a quick call from us, then they would go to step 2. Once they select the pricing option that they would like, here's step 2 is where they can upload their Jeanmonod 3.4 file, okay? Or you can simply select on next. And then here is going to take you to step 3, where you would fill out all of the information that you see under the general there, account executive, select myself or Annie or whoever your local account executive is, your company information, your NMLS information, and then down at the bottom is where you would drop in a PDF of your 1003, okay, like we said, a complete 1003 on there. We do not have to put income on the 1003, the credit report, and then all the way down at the bottom, we do not need a 1008, so keep that in mind. There's no reason for us to have a 1008. You're going to also drop in here the business questionnaire, which we can get the business questionnaire under our resources on the top part of the website, and then you're going to drop in the 12 months or 24 months bank statements. Once you do that, that quick call will go to your account executive. Your account executive will review the documents, If you have everything that's needed, then at that point, actually you would click on submit there, and that would go to your account executive. If you have any additional comments that you would like them to know, maybe you want them to calculate multiple business accounts, or there's a spousal that's going to be added to the loan that's going to be a wage earner, then you could include that there under the additional comments before you submit it, and then you click on submit. Once we get the quick qual, at that point, we'll send it over to our bank statement review team. Once we get the income, then we'll go over it and we'll issue the quick qual over to you.
Yeah, thank you, Jerry. And again, Annie, Jerry, any of our account executives across the country are going to do that pre-underwrite, that pre-qual for you. And again, the more you can have that conversation up front with your account executive will cut down the timeline for getting a really good, accurate pre-qual in your hands. And really, we cherish that referral source that you have. So, I always say it's to help me help you. So, and now I know Annie's, chomping at the bit here because she wants to talk about marketing, because we've got so many great marketing tools for you. I've got to move this. Give me 2 seconds here. I got to move this over to this screen to log in. Hopefully, hold on. Annie's chomping right here, I know. So.
Well, no worries. Well, while we go ahead and John gets signed in, I'll share with you some of the best practices that some of my top brokers are currently utilizing when it comes to marketing. Not only can you just go hit the streets and talk to people face to face, my most effective brokers in this program, really utilize online marketing. So they are on Instagram, they are on LinkedIn, and they've done an amazing job connecting with others in the industry. So they are LinkedIn with asset managers, they are LinkedIn with CPAs, they are LinkedIn with other loan officers, primarily banks who may not be approved in the non-QM sector. And so they are linked in with all these different routes of potential referrals. And so they are always posting several times a week. My top broker, he is posting on average 2 to 3 times a week through social media. And he is posting a variety of different things. He will do video post. He will do just a normal post of, this is what I offer. I can do a bank statement cash out up to 85% of the value of your home at this point in time. Another big thing he does, especially for a lot of the real estate agents out there, is he always is telling a story. So each time we close a loan and he has a win, he's posting why it couldn't go conventional, how we got the borrower qualified, and the details of the transaction, how long it took to close the transaction. So that way everybody in his audience can see these loans close and this is what it took to get this loan. So he's also painting the picture of these are the borrowers, so mentally people can see that. And so he gets a lot of referrals this way. One of the main things that he used to do when he first started out in this business, he connected to a lot of bank LOs, and he would go and say to them, look, give me the purchase. I'll get them in the home and I'll give them back to you. And when they overcome whatever reason they had to go non-QM, you can have this borrower back. And so that was a great way for him to get a lot of leads in the very beginning and help build up his referral business. So let's jump into, so we have the marketing portal open. So let's see what we have at your fingertips. So I always like to go down to flyers. So this is a great resource for you guys to do so many different types of marketing. So here we do have a bank statement flyer. So John, we could go ahead and click on that. And this is super easy for you guys to customize at home. So all you have to do is just input your name, your contact info. And then after you have done that, you can upload your picture, you can upload your company logo. After you have done that, you just hit update and it'll update everything into your information, and then you can download that. So that way, if you want to hit the pavement, if you want to go see realtors, I also have loan officers that join small business associations. So it's just a handy flyer to have with you on at all times, because you never know when you may come across somebody who needs this bank statement loan and to provide the highlights. So a lot of my LOs do use this marketing. So going back to our marketing tab.
Annie, one thing I want to add here, so when you update your information here on the left-hand side here, it populates all these flyers that we have. So we're talking about bank statements today, and I'll put a shameless plug in for next week. Next week, this time, we're going to be doing our debt service coverage ratio. We're going to do a deep dive into that like we did bank statements today. So next Thursday at noon Central Time, we're going to be doing debt service coverage ratio next week. Sorry, Annie. That's
perfect. No, love it. And then another great one is, and I'm going to go directly to this because we're now starting to run low on time, is presentations. So let's click on presentations.
Yep.
So as you guys are on the ground talking with realtors, and this presentation covers all of our products, is we actually have a presentation ready to go for realtors in this portal. So you could take this presentation, you can download it, you can cut and paste what you want to know. And what's even better for you guys is we have a bunch of AEs across the country, I myself included. I love joining you on these presentations. So if you are presenting in front of a group of realtors, either we can be there in person or we can call in via Zoom, let us sell NonQM for you. Let us sell the bank statement program for you. We have the stories, we have the closed loans. We can help you get more business in the door. So this is such a valuable tool in person when you're presenting to realtors. Please utilize your account executive. We have them all over the United States for a reason, to be there for you. This is probably one of the strongest marketing things we can give you in the portal to help you grow your business.
Yeah, Annie, this is, I think it's the most powerful tool any originator has in their tool chest. You walk in there, you've seen Annie today, you've seen Gerry today. They know their stuff and they are professionals. And, we go in there, I kind of jokingly say, we'll go in there on your behalf like we're in the witness protection program. We don't say anything about Angel Oak. We go in there and we'll talk about how we're just one of you, like Trevor. Trevor has asked a lot of great questions here today. We'll go in there on your behalf, Trevor, and we'll say, hey, Trevor, what are you going to do when you have a self-employed borrower? Annie's going to turn and say, well, you're going to reach out to Trevor, right? You're going to go to Trevor, and Annie's just going to say, I'm just one of Trevor's investors. That's it. We don't talk about Angel Oak. And I threw out a statistic there earlier, 9% of the loans we close in bank statements are realtors. So get 12, 13 realtors in a room. You're going to close one of their loans, right? So, and they will, whether we like it or not, realtors pre-screen the buyers, right? The borrowers. And, they hear that they wrote off everything on their tax returns. Well, 67% of you have not originated a bank statement loan in the last 12 months. It's not because it's probably because you didn't know about bank statement loans. So and you extrapolate that to realtors, it's probably 95% of them don't know bank statement loans exist. So, and again, this is the fastest growing segment of the workforce. So I get so geeked up on this. I mean, it's amazing. We've got a lot of great tools here. The Quick Quote tool, you don't need credentials to log in. Fortunately, you do need credentials. You need to be an approved broker and have login credentials to get to the marketing portal, which we have so many more. As Annie said, you can post stuff on LinkedIn, Instagram, Pinterest, Facebook. We're here to help you grow your business. As one of our account executives in Texas say, Angel Oak has invested a lot of time and money in helping you grow your business through this marketing portal. Take advantage of it. It doesn't cost you a dime. So I know we're over the hour. Appreciate a lot of you stayed on. Again, this is recorded. We will get this out to you before end of day tomorrow. If we didn't get, we have a lot of questions here. We got to most of them. If we didn't get to them, your account executive will reach out to you. Gerry, anything to say in closing?
No, John, I'd like to thank everybody for coming on with us today. Hopefully you've been able to learn a lot about the bank statement program and you feel like you've become an expert in the program. Do keep in mind that at Angel Oak, we do have a full menu of programs that we offer. This is just one of many that we do offer. And one thing I like to leave everybody with is if you're not doing these loans and you're not offering these programs, somebody else is. And typically it's your competitor, the person that's next door. And if you're allowing that borrower to go next door, then guess what? You're giving a referral to that person or that individual. You're going to lose a realtor and you're going to lose a client possibly down the road. So I would encourage you strongly to offer these programs. Angel Oak has some of the best account executives in the whole industry. I mean, just in this panel right here alone, you've got over 20 years of experience with Angel Oak. Okay, yeah. Not in the industry, just with Angel Oak. So, and a lot of our AEs have been around for a long time. I would encourage you to utilize them and pick their brains and learn about all of our programs, not just this program. And I think you will be extremely satisfied with the outcome. It's going to make you a much stronger loan officer. It's going to make you a much stronger individual out there as you go out there and you sell and you pitch these loans. So thank you, everybody, for taking the time to be with us today.
Yeah, Gerry, really well said, Gerry. I'm not even going to say another thing over that. So Annie, I'm going to let you close us, Annie.
Awesome. Way well said, Gerry. Couldn't agree with more. And especially right now, we're going through such a tumultuous change in this industry right now. And it's a change that I'm really enjoying because one of my favorite sayings that we have at Angel Oak is we're in the service industry. We just do mortgages. And we all need to remember that our jobs at the end of the day, we are out there doing one thing and one thing only, and that is serving our customers. And over the past number of years, we've always we've turned into a transaction industry where it's just number, loan. And I remember the days when I first started back at Angel Oak in 2015, 2016, where we were hitting the streets. We were talking with people every day, face to face. And how much I really missed that because the last few years, it has just been order taking. And how much fun it was to talk with everybody face to face and grow this business. And the stories that came in, you know, and one of my favorite stories I always love to tell is the loan that we did early on, probably about 2017. But it was a borrower, they moved over here. They were an immigrant to the U.S. and they had earned their citizenship and they were building their dream home. And they hired a really good CPA. And at the start of the build, they qualified from the tax returns. And then a year and a half later, they no longer qualified. And this borrower was into the loan, into this build, $300,000 of their own hard-earned money. And so thankfully, you know, even back in 2017, my LO, you know, they knew of Angel Oak and they reached out to me. And it was not an easy underwrite. They had very complicated business statements as well. And so, but the underwriter that I worked with on this transaction, we believed in the loan and we were able to make it work. And we got him into that home. I think we closed within a matter of days of them losing that $300,000 earnest money. So it was so heartwarming and so gratifying to have my LO tell me at the end of the transaction that their borrower was literally crying at the closing table. And we have the ability to do that. And so it's time to get back out there. It's time to go talk to everybody face to face because those borrowers are out there. And it's time to have that feeling of service back to us again. So that's what I love about the industry right now. And that's what I can't wait. Tomorrow I'm going to go talk to 5 real estate offices in my neighborhood because it's time for us to get back down and do what we do best, and that's face to face.
Yeah, and thank you, Annie and Gerry. You know, I appreciate you guys taking the time out of your busy days. I mean, I love working with you guys. I mean, you are the pros of the pros. And thank you for everyone for joining us today. And again, remember next week, we're going to cover our debt service coverage ratio. And as Gerry said, these are just 2 of programs that we have. We're going to, 2 weeks from today, we're going to cover full doc and condos because, you know, obviously condos are growing. We're going to talk about that next week. But on behalf of Angel Oak, for those of you who have closed loans with us, we really appreciate your business and hopefully continue to earn your business. And for those who have not, you know, give us a shot. You know, we'll make you look good. So everyone have a great day. Look forward to seeing you all next week. And Annie and Gerry, again, thank you guys so much for your professionalism and your expertise and your time today.
Welcome.
Thank you, John.
Take care.